All right, good morning. This is our Morning Vol Report at OptionPit.com. This is Andrew Giovinazzi, Chief Operating Officer of said website. Your home for options, education, and volatility. Now here we have our OptionPit Condor Intensive class, free for all OptionPit subscribers. If you're OptionPit Live or above, you get the Friday class for free. We will send you, everybody at OptionPit will give you a link by Friday of next week. The class is Saturday. We'll then start the Masterclass series 2 weeks hence. Okay. So again, sign up. What do we have? I'll tell you what we have here. So this is something, and let's just go real simple. Lowest long-term vol I can remember seeing in VIX. This is a story. I'm just trying to figure out ways to own it, but right now, the market is pricing things like nothing is ever going to happen ever again. And it very well could trade like that for years. It's traded like that in the 90s. I know it traded like that in the 80s, but way before VIX, way before index products, pretty much. It traded like that in the 2000s. Again, we're talking an option time, not, basically anything pre-70s is no option. So as I'm dating myself a little bit, I'm not that old though. And then even through, so now in the latest decade, we're starting to see the lowest level of the last 7 or 8 years. It's as simple as that. With nothing on the horizon, vol gets low. Funds take more risks, they sell more premium, and then the buyers of that premium sell futures. It's kind of a cascading effect that pushes vol down. What we do have today, though, is we have basically a very low print for VIX. Something I'm looking at for our chat room. But we're here at 10.5. Very hard for VIX to go down a whole lot more. We do have that secondary French election next week. I also think the performance of VXX and the vol products, they are just going to creep next week. I think that has implications of what we might put on. We'll look at that in our chat room as well. And really, how much to expect out of the vol products till next week? I don't expect much. Is the simple answer. Just not very much going on at all. We'll probably see some decay. My guess is probably the futures catch some kind of a bid, but not much. And then the French elections will be whatever they are. That could be a vol catalyst or not. My guess is that most volatility, the volatility for next week will probably get destroyed. They're already, if you just look at it, these are absolute low numbers I've seen for this May 05 cycle is dead low. 7% vol for next week. There's like nothing happening. Now that doesn't mean the market can't slowly rally another 0.5%. But for now, there's literally no volatility prior to the election. That's what we have. So that is, I think, what's our cycle is we have a May 5 expiration. That's the Friday before the election, with a bid for volatility after the election. So if you look at the SPX, you'll actually get the Monday date. So it's still there. It could be sort of the 8th is the key one. I do not see the volatility of this strike going down at all. I think it holds that level for the week. It might fluctuate a little bit, but anything you can time spread off that, it might work. We just have to price those out and see if there's any real money there. I'm not quite sure if it's worth selling something in front of it or just owning it and waiting till the last minute. I'm not quite sure. But you're also looking at 7 volatility to May. So this is how I remember the SPX trading in the 90s. Vol stayed really low until it didn't, until there was something going on, and then we had a big pop. And it looks like we're seeing that again. We were waiting for big technology. We got those big earnings. So, Amazon, it's up $100 in a week, I believe. Week or 2 weeks. Let's take a look. I think the same with Google. It was just trading $8.45. Now, that's $100 since the end of March. A massive move. Google, same way. I think Google was trading. I can't call it Alphabet. It's too stupid. 8.30. So that's up $100 since the 18th. 2 weeks. So all of the pre-earnings gains are already there. If anything, everybody loves the stock. I think it probably settles a little bit. We will look at a couple plays like that. I think, maybe put time spreads even. I don't know if I really want to be short it. We're just not seeing a whole lot going on as far as the GDP numbers kind of stunk. And all I can see is sideways. So, I think you trade for sideways, and just in case you have some sort of puts in the kitty, but you're not getting much of a rally in oil. Technology is already up huge this year. Here's a nice little graphic from one of our clients here. Look at the Qs. 15% this year. Massive gain. The only thing outperforming it, I think, is hogs or live cattle. S&P 500, respectable 7%. That's good for a year normally. 7% per year. All right. So I think the broader market is tired, although I think there's some momentum that wants to get to 2,400. I think it's going to be tough. And I think that's what we have. That's what we have for market. Not a lot to expect from volatility for the next week. And we will price around that today, trying to position for next week, as today probably not much is going to happen. All right. And with that, I will see many of you in our regular chat room at 10:15 Eastern Time. Bye-bye.